Alright, what's up guys? This is Taylor, and I'm doing the free video for Wednesday, March 5th. So I got a screenshot of the put-call ratio here, and if you look back at your August 5th candle, put-call ratio hit a high of 1.05. And then look at yesterday's action, put-call ratio hit a high of 1.08. So if we look back at the QQQ from August, you get the big breakdown, big flush, walking it lower. And on your August 5th candle, you get the move below and the close back above that 200 SMA. The pop in the put call tells us everybody and their mama, so to say, jumping in there, getting short, buying puts on the break back below that key level. And then by the time the market closes, anybody getting short around 430, 425, they're feeling some pressure, they are feeling the heat, that creates your short squeeze. So current market, you got a big pop in that put call yesterday. You got the break and the close back above that 200. For now, those are a couple of similarities between the current market and that flush back in August. Now the key from here would be, if you want to come in and call for a push back into 510, 515-ish, all right, and I don't think you come in here and call for a move back towards an all-time high. The pullback has definitely done some damage to your structure. If they can hold their ground above that 493, maybe calling for a push back towards a falling 21. The key for that would be we're getting lower time frame buy signals, and at the close here today, on the big 3 indicator, we had 5-minute buy signals, we lost them. We don't have a 15-minute buy, we don't have a 30-minute buy, and we don't have an hourly buy signal. The one little bit of progress they did make was getting that close back above the hourly 21. And here's the thing, we can pull back and hold to a key level of support. If we can't get our lower time frames out of downtrends, we're not going to turn the corner. And up until today, you are getting a pretty good downtrend here on the hourly. They flush away from the 21, they pop back to it, flush away from it, pop back to it, flush, pop, flush, pop. For the first time since your big flush, you get a couple of hourly closes back above that today. They do that with a positive momentum shift. So yeah, I think their best chance is tomorrow. They try to fight and keep it above 500. And then the trigger to jump in and buy it would be a 5-minute buy signal or a 15-minute buy signal. And I don't think the bulls are anywhere near out of the woods. So I think you buy it in a certain fashion. I wouldn't come in there and buy calls that expire 50, 60 days till expiration. I wouldn't be backing up the dump truck and taking a big size. Small size, good risk reward. Not going to call for a big push. If they can get those buy triggers, a pop into 510, 510-ish on a shorter dated call could be decent for a paycheck. So that's a current view there on the QQQ. And if we're going to get a pop in tech, we got to get better action than a few of these, Apples, Teslas, Nvidias, etc. Now for Nvidia here. Pretty good flush yesterday. They do respect that 110 put wall, and they get the close back above that 113 low. So a little bit like that QQQ idea. Big flush in Nvidia, take out the key level. Anybody getting short around that 110, they feel the pressure on the immediate pop back into 115-ish. If Nvidia can keep the pop going, shorts feel more pressure. That can create your short squeeze. Now to play for the short squeeze on Nvidia, same idea as a QQQ. Above the hourly 21, 5-minute, 15-minute big 3 buy signals could make for a decent push. They can't get back above the hourly 21, they pull back, take out the low. Then I think it is adios to Nvidia. Another name here could be a Microsoft. Right, they pull back into that 200 SMA. Good hold, good pop. If we check the hourly, you maybe look for a move back above the hourly 50, but that'll be the tricky part about getting long here. When they pull the market back as hard as they did, they can crush the daily structure, 4-hour structure, 1 hour, 30-minute, 15-minute. That means until things can really change, every pop you get will be a pop into a different level of resistance. So Amazon goes 197 into 210. Good looking pop, but it's a pop taking it back to a falling hourly 50. And if Amazon can clear the hourly 50, get the 21 back above the 50, get some stacked EMA, some buy signals, then you could call for more of a trending push off the hourly. So patience is called for, but I do think when you look at that August 5th pullback, big pump in the put call, the break below, and the pop back above that 200, it all looks a little bit similar to the current QQQ. Now, if you have the big 3 indicator, a good case study tonight, go look at the QQQ back from August 5th, but look at it on a 5-minute, 15-minute, 30-minute, 1-hour time frame. And you'll see the picture they have to paint for a short squeeze. Right? It's 5-minute buy signals, 15-minute, 30-minute. The more, the merrier. If they can get that above the key level after potentially roping in a lot of shorts, you could get your short squeeze. If they can't do that, and at any point here, next couple of days, next week, QQQ is back below that 490, then I do think we're in shape for a bigger flush. So patience, guys, but as always, thank you for watching. Hope y'all found that helpful. Watch your hourly 21, look for lower time frame buy triggers. Could be room for a bit of a short squeeze pop. Till next time, thank you for watching, and have a great night. Adios.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.